That's what we've been getting is good progress on inflation with growth at a good level and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that. But so far, they haven't had to. And, that's why we were watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market while we're continuing to make progress on inflation. So, we're getting good results here.
That's why the Federal Reserve said today was not the day to cut interest rates. However, the Fed chair did say there is room for maybe 1 or 2 rate cuts this year. As I reported in this video earlier today, the Federal Reserve decided to keep interest rates steady today at the highest level we've seen in more than 20 years. 5.25% to 5.5%. We've been sitting at that rate since July of last year. And as I've reported for years, the whole point of having these high interest rates is to make the cost of borrowing money expensive. So people and businesses pull their money out of circulation so inflation can come down, which, as you heard the chairman just say, is happening. But that doesn't mean Americans feel good about the economy.
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful.
Okay, so when is this pain going to be over? Are we ever going to see interest rate cuts? The short answer is absolutely yes. But the long answer is, originally, the Fed penciled in 3 rate cuts for 2024. But today, after we've been seeing this really stubbornly high inflation this year, the Fed decided to cut that projection to 1 or maybe 2 rate cuts in 2024, with more cuts penciled in for next year and more in 2026.
If you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point.
Okay, but when does the Fed know it's time to start cutting rates? We know cutting too late could crash the economy, but cutting too early could cause inflation to spike back up.
We want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%?